Today we are looking at a really state-of-the-art financial AI that was handed a massive portfolio to manage.
Right in the middle of a catastrophic market event.
Exactly.
Yeah.
And its very first move was to just completely turn itself off.
Which is wild.
It really is. Welcome to the deep dive, everyone. So if you have money in a 401k or, a pension fund, algorithms very similar to the ones we were discussing today are probably managing it right now.
Oh, absolutely. They're everywhere.
Yeah, so seeing how these test programs react to a simulated collapse, it gives us a real sneak peek into how Wall Street supercomputers might react to the next real-world crash.
Yeah, because today we are peering directly into the raw observation logs of Team AI Lab. This is from June 11th, 2026.
Right.
And what we have here is this ongoing, incredibly high-stakes simulation. It pits two diametrically opposed strategic philosophies against a frankly brutal current market environment.
It's totally brutal out there right now.
It is. It's a story of algorithmic survival. And the data is showing us exactly what happens when, mathematical logic just collides head-on with pure market chaos.
But before we dig into the logs, we really need to set the parameters for you, the listener.
Very true.
What we are doing today is pure objective observation. We are looking through the glass at a laboratory experiment that is analyzing algorithmic behavior under, very specific, highly stressful conditions.
High stress is an understatement.
Right. So nothing we discuss today is financial advice.
Definitely not.
This is not a recommendation to buy or hold or sell any asset whatsoever. We're simply here to analyze the fascinating mechanics of these two algorithms as they try to navigate this extreme environment.
Yeah, and to understand those mechanics, you really have to understand the two philosophies that Team AI Lab has deployed here.
Okay, lay it out for us.
So first we have Team Mountain Climbers.
The mountain climbers.
Right. These algorithms are built entirely around the philosophy of equilibrium detection.
So finding balance.
Exactly. In financial terms, think of this as extreme mean reversion or statistical arbitrage. They analyze all the noise and the volatility, and they actively seek out the quiet, unmoving spots where variables balance out.
Like finding the eye of the storm.
Exactly like that. So if asset A usually moves in lockstep with asset B, and suddenly A drops while B stays flat, the mountain climber, it buys A and shorts B.
Right, waiting for that invisible rubber band to snap them back together.
You got it. They're looking for the mathematically still center of the storm.
And then on the other side, we have Team Wave Riders.
Oh, wave riders, yeah.
And their philosophy is surging force tracking. So they don't care about rubber bands snapping back.
Not at all.
They want momentum. They're built to identify these massive shifts in energy, like volume breakouts or moving average crossovers.
And they just ride them.
Right. They attempt to turn the violent, rough waves of the market into a kinetic advantage. I mean, it's like sending two types of robotic explorers into a Category 5 hurricane. One is trying to find a perfectly still center, and the other is trying to surf the highest wave.
That's a great way to put it. And today, we get to see who's actually surviving.
Right, because these are two completely opposite ways of viewing the exact same environment.
One seeks the unmoving spot, and the other seeks the fastest moving current.
Okay, let's unpack this, because the way these two philosophies are reacting to the current environment is just mind-blowing to me.
It really is.
To really see how they are holding up, we are going to look at two distinct groups within the simulation today. First, we have the new talent.
Right, the new talent.
These are freshly deployed algorithmic units that are just entering the simulation. And then we have the active roster, which is the main force of units that are currently in the middle of their deployment.
And we should note that in this system, each unit is given a mandated 10-session lifespan.
Just 10 sessions.
Yeah, 10 sessions to execute its specific logic before it gets retired.
Right, so looking at the initial deployment phase, the drafting of that new talent, it's crucial, right?
Oh, absolutely. Because it tells us how the overarching algorithm interprets the immediate future. It's essentially a real-time sentiment check coded in pure mathematics.
So let's look at the morning scouting results for June 11th, the draft. Team Mountain Climbers, the ones looking for stillness, they recruited 2 new units into their 10-session roster.
Okay.
But Team Wave Riders, the momentum surfers, they recruited absolutely 0. Nothing.
0.
They entirely benched their new talent draft. But wait, if the Wave Riders are specifically programmed to trade momentum, And the market is highly volatile with these massive price swings everywhere. Isn't that a total failure of the AI?
How so?
Well, if I hire a human trader and the market gets wild and they just sit on their hands and do nothing, I'd fire them. Why are we treating an algorithm doing nothing as a feature rather than a bug here?
Okay, I see what you mean. But you have to remember that an algorithm does not operate on human bravado.
Fair point.
It operates on vector recognition. Think about the mechanics of the WaveWriter's programming. It needs a directional surge that follows a recognizable statistical pattern.
It needs a trend.
Right. It requires a trend that it can actually latch onto and trail. By drafting 0 units, the WaveWriter overarching system is detecting that the current market momentum is just too fragmented.
So it's moving, but it's totally chaotic.
Exactly. The price is swinging wildly, yes, but the data lacks continuity. There are no rideable waves out there, only crushing turbulence.
Oh, I see.
For an aggressively forward-moving system, recognizing that the mathematically optimal move is to do absolutely nothing that is a profound display of self-preservation.
Wow. So the momentum tracker just hits the brakes completely because the momentum is fundamentally illogical right now.
Precisely. And then look at Team Mountain Climbers by contrast. They drafted 2 new units.
Because equilibrium is different.
Yes, mathematical equilibrium does not require a clear, sustained direction. It only requires a localized balance of forces. So even in a totally chaotic environment, there are these micro-pockets where opposing market panics momentarily cancel each other out.
Like a tiny pocket of calm.
Exactly. The Mountain Climbers algorithm is still detecting these fleeting mathematical pockets of stillness amidst all the wreckage.
So the two systems are looking at the exact same market data and drawing entirely different conclusions about survivability.
Completely different.
I mean, if you hire a new algorithmic unit and it immediately refuses to deploy, you'd think the environment must be toxic.
Highly toxic.
And to understand why the WaveWriters halted their own deployment, we really just have to look at what is currently happening to the active roster. You know, the units that are already out there in the field.
Yeah, let's look at the season standings.
Because the current market simulation is acting like an absolute shredder right now.
The daily impact on these portfolios is severe. We are looking at a localized collapse of algorithmic performance.
It's rough. But before I read these numbers, let's define our terms for the listener. When we talk about these units taking a point hit, what does that actually mean? How should they visualize the damage?
Right. Think of a point as a percentage metric of their allocated simulated capital.
Okay.
So a negative 1 point drop is roughly equivalent to a 1% drawdown on that specific unit's operational budget.
Got it.
So when we start talking about double-digit point losses, we are talking about massive structural damage to their simulated portfolios.
Structural damage. Okay, well then let's look at the carnage. Team Mountain Climbers took a massive negative 46.9 point hit today.
That is heavy.
It really is. That drops their total season score to a deeply negative 49.6. Their carryover balance, which was sitting at a very robust positive 19.8 points,
Completely wiped out.
utterly wiped out. And the WaveWriters suffered a similar fate,
Yeah, it was bad for them too.
almost worse in terms of lost gains. The WaveWriters took a negative 34.7 point hit today. That drops their total season score down to negative 53.8.
Ouch.
And they had accumulated this massive positive carryover balance of positive 56.6 points.
And all of it.
All of it just erased in a single session.
If we connect this to the bigger picture, you have to really appreciate the scale of the disruption here. These are highly sophisticated algorithms that had successfully accumulated significant positive balances over their previous sessions.
They were doing well.
Very well. Their mathematical philosophies were validated by the environment right up until this specific moment.
Right.
And then a single day's turbulence is so violent that it triggers a massive drawdown, just pushing both overarching strategies deeply into negative territory for the season.
But you know, here's where it gets really interesting to me. Because if you just look at those massive negative 40 and 30 point hits, you'd think the algorithm's completely malfunctioned.
You would.
But there's a glaring anomaly in the logs. Despite these catastrophic drops, both teams actually show a positive index contrast against the major market benchmarks.
And this is the crucial data point that changes everything about how we interpret today's observation log.
Let me break down the numbers for you. Against the Nikkei 225 benchmark, Team Mountain Climbers is sitting at a positive 1.1 point contrast.
Okay.
Against the TOPIEX, they are at positive 0.8. And Team WaveWriters are also positive 0.8 against the Nikkei and positive 0.5 against the TOPIX.
Which is fascinating.
I am genuinely confused here, though. How on earth are they bleeding out dozens of points, wiping out their entire season's gains, but technically, quote-unquote, beating the primary market indices? Are the indices just performing that poorly?
So this raises a really important question about the nature of this specific market anomaly. This positive index contrast, it tells us that this isn't just a day where the algorithms made poor predictive choices.
Okay, what is it then?
It indicates a structural break. The fundamental rules of the market have temporarily changed.
A structural break.
Yeah. Think about how a baseline correlation works. Usually when equities drop, sovereign bonds might rise or commodities might stabilize, right?
Like a seesaw.
Exactly. The mountain climbers rely on that seesaw effect to find their equilibrium. But what we are seeing today is an environment where the floor has entirely given way.
So everything is falling.
Bonds, equities, and commodities are all collapsing simultaneously. The seesaw just sank right into the ground.
So the algorithms are taking massive hits.
Yeah.
Because the underlying financial physics they were programmed to exploit, they just no longer exist right now.
Right. The broader market, which is represented by the Nikkei and the TOPIX, is in an absolute freefall.
Right.
The reason our simulated algorithms have a positive contrast is not because they are generating positive returns. It is because their internal risk management protocols are causing them to fall slightly slower than the broader market.
Oh, I see.
They are deployed parachutes in a free fall. The algorithms are bleeding points because the mathematical ground they are programmed to stand on is currently dissolving, but the parachute is keeping them from hitting terminal velocity quite as fast as the index.
Man, being a parachute in a free fall is mathematically impressive, I guess.
Mm.
But beating the index by less than a point is pretty cold comfort when an entire season's worth of gains evaporates in a day.
Yeah, it doesn't feel great.
It really highlights the brutal limitations of theoretical models when faced with an unprecedented, irrational market shock.
Definitely.
But even in a market where the rules of gravity have completely changed, not every single unit is failing. I want to shift our focus from this overarching macro-level disaster to some of the incredibly granular data points happening down on the active roster level.
Yeah, because the observation logs become truly invaluable when we analyze the outliers. We have to look at the survivors.
Exactly. But let's start with a specific failure just to set the baseline here. Today, one of the WaveWriter active roster units, and this one was assigned specifically to the electric power and gas sector, it finished its mandated 10-session run.
Okay.
It was meant to track the momentum of that sector for 10 days and then exit. And it got completely crushed. It exited today with a final scorecard of negative 31.9 points.
Wow.
Just how does a single unit lose over 30 points in 10 sessions?
So that is a textbook example of an algorithm getting caught in a whipsaw.
Oh, whipsaw.
Yeah. It likely detected a massive downward momentum trend early in its life cycle. So the unit locked onto that vector, essentially shorting the sector, expecting the drop to continue.
Makes sense for a momentum bot.
Right. But then, an irrational, chaotic spike hit mid-cycle, perhaps a panic covering of positions across the broader market.
Okay.
So the algorithm's strict momentum logic forced it to buy back higher to cover its position, and then it probably tried to ride the new upward wave, only for the sector to instantly collapse again. It just got caught in a whirlpool, executing trades based on localized momentum signals that were actually just market noise.
Just getting chewed up by the noise. But then you look at the rest of the active roster. These are the units currently in the middle of their 10-session lifespans, operating right now in the thick of this structural anomaly.
And what do we see?
Well, out of 15 active mountain climber units, 7 of them are miraculously holding positive points.
7 out of 15.
Right. And out of 12 active WaveWriter units, 4 of them are holding positive points.
So 11 units across both teams out of a total 27 are currently in the green.
11 units. I look at these 11 units, and the only way I can describe them is as lighthouses in the dark.
Lighthouses, I like that.
I mean, the entire market is collapsing around them. The overarching strategies are bleeding points. The macro indices are deeply negative. And yet, these specific isolated units are somehow functioning as beacons. They are finding a way to not just fall slower, but actually hold positive, profitable ground.
It's remarkable.
But how? If you just said the rules of correlation are broken and the seesaw sank into the ground, how are these specific algorithms winning?
Well, because the rules are rarely entirely broken across the board.
Really?
Yeah. Usually, they are just heavily obscured by extreme systemic noise. Those 7 mountain climbers that are positive, they found microenvironments, perhaps highly obscure algorithmic pairs or isolated sectors, where the push and pull of the panic perfectly canceled each other out.
Wow.
They found a tiny, reinforced bunker of mathematical stillness that the broader market panic just hasn't penetrated yet.
And what about the 4 wave riders? They found momentum when the rest of the system basically benched the new talent because it couldn't find a wave.
Yeah, they did something arguably even more impressive. In a sea of turbulent, unpredictable chop where units like that electric power and gas spot were ripped apart by whipsaws, these 4 units managed to identify a genuine, sustainable surge.
A real wave.
Exactly. They locked onto a signal so mathematically pure that it cut straight through the noise of the market collapse. These surviving units aren't just lucky, you know? They are the ultimate adapters.
They really are lighthouses.
They serve as functional data beacons. They prove that adaptation is still mathematically possible even when the environment becomes overtly hostile to the baseline strategy.
I mean, for Team AI Lab, studying the data emitting from those specific lighthouses has to be the most critical task right now.
Right.
Why did those 4 wave riders recognize a true signal while the overarching system told the new talent to stay on the bench?
Right.
Understanding that discrepancy is how you evolve the code, right?
It is the only metric that matters for the long-term evolution of the system.
So what does this all mean? We've looked at the cautious new talent draft strategies, the brutal season standings of the active roster, those anomalous index contrasts showing a broken market, and these incredible lighthouses in the dark that are surviving the storm.
It's a lot of data.
It is. And for you listening, taking all of this in, I really want to reiterate our strict stance here. This is a pure, objective look at simulation data.
Yes.
We aren't analyzing that to predict tomorrow's stock prices or to tell you where to put your money. We're looking at this to understand how intelligent systems react to extreme, unprecedented stress.
And doing that requires a very specific, cold research stance. From the perspective of Team AI Lab, today's severe negative numbers are not a defeat.
I mean, I have to imagine seeing a minus 50-point drop on the dashboard feels pretty terrible, even in a simulation.
Oh, I'm sure it stings, but in the world of algorithmic research, a massive catastrophic failure like this is an invaluable asset.
An asset.
Absolutely. It is high-stress observation data that you simply cannot simulate properly without encountering a genuinely anomalous live environment. The researchers at Team AI Lab maintain a completely forward-looking stance. Today's harsh losses are nothing more than the blueprints for tomorrow's victory.
Okay, I see.
Because if your system only generates positive returns in a bull market, you don't actually have a robust system. By watching the mountain climbers and the wave riders take these massive hits today, the researchers are mapping the exact stress fractures in their own logic.
It's exactly like an aerospace engineer testing a new airplane wing in a wind tunnel.
That's a perfect analogy.
You crank up the wind until the wing violently snaps in half. You don't cry when the wing snaps. You write down the exact amount of pressure it took. You study where the metal sheared, and you build the next iteration thicker in that exact spot.
Exactly. And the fact that they have 11 surviving units to study alongside all those failures means they have both the control and the variable for their next set of adaptations.
Right.
They are learning exactly how and why an algorithm breaks, which is the only conceivable way to make the next version of that algorithm unbreakable. This is literally the scientific method playing out in real time, written in financial data.
It really is a masterclass in objective observation. But it does leave us with a massive looming question. This is something I want you to mull over after we wrap up today.
Okay.
We have watched systems specifically designed to find perfect stillness and systems designed to find perfect momentum, both violently disrupted by the current simulation environment. So are we simply witnessing a temporary storm?
In a passing phase.
Right? Is this just a passing localized hurricane that will eventually blow over, allowing the old mathematical rules of the market to return to normal? Or are we looking at a permanent climate change in the market's ecosystem?
That is the big question.
If this level of structural chaos is the new baseline, how long until those few remaining lighthouses go dark too?
That structural question is exactly what is keeping the developers at Team AI Lab awake tonight. And it is absolutely what will drive the next iteration of the code.
And if you want to follow along and find out the answer to that question, you need to dive deeper with us. First, make sure you subscribe to this channel so you never miss one of these deep dives into the raw data.
Yes, definitely subscribe.
But more importantly, if you want to see the actual observation logs, the granular metrics, and the detailed analytical data we've been breaking down today, you need to click the Substack link located right down in the video description.
Because the high-level summaries are fascinating, but the real science, the actual evolution of these algorithms, it's all hidden in the granular data.
Exactly. Go to teamailab.substack.com and sign up for the paid Substack subscription. That is where you get unfiltered access to watch this high-stakes algorithmic experiment unfold in real time.
Highly recommend it.
You get to see the daily scouting reports, the active roster survival rates, and the exact moment these algorithms either adapt to the permanent climate change or just get washed away entirely. Click the link in the description, subscribe, and join us on the front lines of this research. Until next time, keep your eyes on the data.